Hey there, my name's Curtis Lucas. You're watching Empire Building. So we went through quite a ride there yesterday, and there is a lot of fear, uncertainty, and doubt out there, though I think it's quickly being dispelled. I'm sure most of you, like me, when this crash was happening, if you happen to be watching it at the time, there wasn't any clear answers. So in this video, I really want to walk through exactly what took place and how it cascaded into the result that we've seen. But before we do that, I just actually want to point out that this isn't exactly what people would call a black swan event. It is a mass liquidation, but this is just a regular swan. If anyone like me has been in cryptocurrencies since at least 2017, a 15% drop in a single day is nothing. This used to happen all the time. So it's nice to see that Bitcoin still has it in it. But while this was happening, I was on the Discord channel talking with some of the other members of Patreon. We were discussing ideas and sort of the bullish thesis around the Bitcoin miners, and then the price started to drop. We all started searching for information, and very quickly things started to pop up, starting with this one. The YouTube account FX Hedge tweeted this supposed story: U.S. Treasury to charge several financial institutions for money laundering using cryptocurrencies. Sources. Now, this was hilarious to me because, for starters, the U.S. Treasury doesn't press charges on anyone. It's not in their mandate. The U.S. Department of Justice places charges. So right away, I have issues with whatever this claim is making. Also, I don't even know who FX Hedge is. I was trying to actually source who these people are. I have no idea. My guess is it's probably a hedge fund. But the tweet did seem to coincide with the approximate time that the dip was happening. But it's unclear that it could have actually been the cause of the dip, because at the time, once I had found this tweet, there hadn't been that many interactions with it. Very few retweets, certainly not enough that could have spawned this result. And considering there was no confirmation of any source, it didn't seem to be a likely candidate. But they certainly were piling on to the already existing panic. But the reality is that it wasn't even really all that necessary, because in an environment that we've been in for the last little while, we have a lot of people who are anticipating the breakout. And within Bitcoin, you have a lot of leverage traders, people who take their existing Bitcoin and leverage the crap out of it, upwards of 50 times. So you can turn one Bitcoin into 50 Bitcoin in terms of your exposure. Now, if you're right and the price does break out and continues to surge, you're going to make a lot of money. But there's a problem with this. All of this information is perfectly transparent, and large institutions could very easily take a look at this and decide, you know what, I'm going to take the opposite bet and maybe spread a little FUD and maybe nudge the price just a little bit in the opposite direction, just enough to begin to trigger liquidations. Then you pile on a little bit more FUD. People begin to get scared, and more of them will close out their positions, driving the price down even further, which then triggers liquidations of other traders, which then drives the price down even further, which then triggers more liquidations, and you end up with a chain reaction. The conditions for this were frankly perfect. And then on top of that, the next thing that we find out was this. Willy, the on-chain analyst, who I follow very closely, he's one of the smartest people in terms of analyzing on-chain analytics. And he pointed out that there was a rapid decrease in the hash rate on the Bitcoin network. In just 48 hours, the hash rate capacity dropped nearly in half. Now, of course, that was immediately after a sudden spike. So the point here is that he's making the claim, or making the case, that hash rate and price are correlated. I actually took issue with this at first because fundamentally speaking, there is a correlation between the two, but hash rate actually lags the price. If there's a hash rate decrease, then some of the miners could become unprofitable, so they deactivate some of their miners. This leads to a decrease in the hash rate, but that follows a decrease in the price. In this case, things were quite different. In this case, the hash rate dropped before the decrease in the price, considerably before. And by the time we actually had the crash that we witnessed yesterday, the hash rate was already well returning back to normal. And the cause of this drop in hash rate was that in China, they've been witnessing some severe flooding. It had actually been reported on Friday that the mining pools in China had been shutting down, or the hash rate on them had been dropping as a result of these regional blackouts. These were purposeful blackouts that Chinese authorities had instituted so that they would be able to conduct safety inspections of their coal-fed power facilities. The resulting blackout led to, of course, the miners in those regions going offline and causing a rapid decrease in the hash rate. Now, fundamentally speaking, this has no bearing on anything really. All a drop in the hash rate means is that for a period of time, blocks will begin to be mined slower because there are fewer miners on the network to solve those hashes. And this effect will continue until either the hash rate rises back up again, or if it's extended period of time, in this case, we got a couple of weeks until the next difficulty adjustment on the blockchain occurs. If all the way until that time, the hash rate were to remain depressed, then that difficulty rate will be adjusted lower, making it more profitable for all the other miners who are still connected to the network. But it has no impact on anything else. It's nothing to be afraid of. The problem here is that just as the last event where there had a lot of people, as Andreas Antonopoulos put it, was an asymmetry of knowledge, I believe is the way he put it.
Now, this is a simple case of information asymmetry. What that means is those who understand how the Bitcoin blockchain works and understood what this was quickly could then look at the market reacting in a panic and say, this is a nice opportunity to exploit information asymmetry for profit.
A lot of people they see this happening and they don't understand what it means. So they quickly become frightened. And in this particular environment where we have so many people who were expecting a breakout, who went, as Willy put it, degenerately long.
It's consolidating, essentially hitting the sort of 60-ish zone, and it's been going sideways for months, down, up, and then it creates this kind of triangle, and for traders, it's a technical trading pattern called an ascending triangle, and the probability of that breaking upward is quite high. I can't recall exactly what that is, but it is high. It's like above 66%. And so it's kind of, and it's a big one, right? It's going for months. So it's a really brain dead trade, because once it breaks above it, you've got a very high probability of it running. And so every time we got close to it, everyone went long on the derivative trading market. They went degenerate long. And so, of course, when that happens, it's very incentivized for people to take the other side of the trade. And so it really, right now, we broke it, but everyone's still very, very largely in long positions. So it's creating a lot of headwinds for us to move upwards.
There's a lot of people who were leveraging their trades. So all these things combining together, whether it be large hedge funds, large institutional players who saw this as an opportunity to scoop up more Bitcoin and also make money on the way down. They could bet against this and nudge it in that direction. Combined with that asymmetry of knowledge, fear, uncertainty, and doubt, it doesn't take much. Basically what we have here is so many people were carefully setting up a series of dominoes. And this domino tower was getting higher and higher and higher. But the problem is, it doesn't take a whole lot. One false move and the whole thing comes crashing down. That leverage trading does present a problem, and it's not that hard for institutions to see what's happening. In fact, anyone can see what's happening. All of this is available because it's open source. This is a fully transparent system. So if you are placing Bitcoin futures bets, you need to be very, very careful that if there is an event like this, which again, like I said, this is no black swan event. This is just a regular swan. A 15% drop is really not that significant. But if you're heavily leveraged, it's going to take you out. But the good news is, since we know that there was no fundamental reason for what happened, this just gave institutions everything they were looking for. There was an opportunity for many of them to acquire rapidly more Bitcoin, and they even made some money on the way down. Problem is, obviously, as usual, this was at the expense of most retail traders. In particular, those degenerately long retail traders, and I'm sure some of them were even institutions as well themselves. As for the Bitcoin mining companies, unfortunately, we are probably in for some pain come Monday morning. That is, unless we see a rapid recovery in the price of Bitcoin. I do expect we will see a recovery. I just don't know how quickly we're going to get it. So the bottom line is patience is still going to be key here. It'll be interesting to see how the markets actually respond to this come Monday morning. Having it occur on the weekend does provide a little bit of a buffer, at least, as people actually gather up the real information and they're able to make a rational decision come Monday morning. We just don't yet know what that decision is going to be. But as I had mentioned earlier, just before this happened on the Discord channel with the other Patreon members, we had been discussing the bullish thesis for these Bitcoin miners. And there is something I do want to share, but I'm going to save it for a different video, but it has to do with the hash rate in particular. We all know that as time goes on, the hash rate on the network will increase, which will in turn increase the difficulty on the network, which will inevitably decrease the amount of reward that each individual miner will be able to receive, assuming that the growth of their hash rate can't outpace the growth of the system as a percentage. But the main point here is we are in the midst of a chip shortage. You may have heard about this, but it is severe. But coupled with that, we're also approaching the limits of Moore's law, meaning that as time goes on, the rate of the increase in efficiency of these miners or any computing device, it's diminishing. We're reaching the limit of what we can actually do with these chips. So while we've seen rapid increase in the efficiency of ASIC miners over the last 5 years or so, that increase is quickly going to slow down. I'm not going to get into much of the details here because I am going to save it for a full in-depth video, but this reality is very good for existing Bitcoin mining companies that manage to scale quickly, because anybody who follows not only has to wait a very long time to fill adequate orders for these miners. As time goes on, even the latest generation miners are not going to be that much faster than the miners that the existing operators have already acquired. But as I said, I'm going to save the in-depth details of this for a future video. But the point here is we are at a turning point. Having a mass liquidation event like this happen really does put the market in check, and now we know where the bottom is. We just found it. In my opinion, I don't expect that we are going to form a lower low here, but it is something we should keep an eye on for the next week or so. But as usual, as long as your outlook is at least longer than that, then there's not a whole lot here to fear, especially when we consider that the cause of this type of downturn wasn't based in anything real. This is no different than the last time this happened, when everybody got spooked over the double spend that never happened. People are simply fearful of things they don't understand. And unfortunately, most of the people invested in this space still do not understand how it works. And now that the system has been completely flushed of all of those obnoxiously long investors, and anyone that still had weak hands have also been flushed out, there's really not many more left to sell. Make no mistake, we are still in the midst of a massive bull market here. So generally speaking, the upwards trajectory is the only choice this market has because there's just not enough people willing to sell. This is fully evident when we consider the continuing decrease in Bitcoin available on exchanges. It's funny when you look at the longer time horizon on Bitcoin, and you can see we've had several pull downs like this that at the time were quite scary, but looking back on them, they were clearly, obviously, moments to be buying. Sooner or later, more and more people are going to begin to get the message. And as usual, my favorite indicator, the search term or the interest in the search term for Bitcoin on Google Trends, still places it on this cycle very low. We haven't even yet reached the highs of the former bull market. So in relation to this, I'd put us somewhere around this place in this market as it stands right now. We've got a long way to go. By the time we're done here, this former peak will look like the last bull market before that. The reason why we haven't seen a rapid spike here yet as it stands is because the general market, as in the retail traders, the masses, still do not believe this is real. Institutions are not forming the bubble here. They're forming the base. So I would fully expect that by the time this bubble does burst, when we do form one, this, where we are right now, will form the bottom of the bear market. So you really don't want to be selling at what will become the bottom. You just have to be able to muscle through these periods. I know they're hard, but this is by no means the scariest thing we've ever seen. You just got to get used to this or just invest somewhere else. As always, this is not my advice. This is only my perspective. You need to make your own decisions and be comfortable with whatever those decisions are, including the consequences that come with them. Well, that's all for this one. Now let's get back to empire building.